All right, so you guys are on to chapter 7 in the in your homework, but you're down to one chapter kind of per week here. When we get to chapter 9, I give you a few extra assignments. That's kind of a chapter that's near and dear to me, and so you end up doing a little bit of extra work, and a little bit of that will actually be in Brightspace. You'll submit some assignments to Brightspace in that one. Okay. Other than the projects, that should be the only exception. The rest of your assignments and quizzes you're going to be doing in Connect. Okay. So that said, because I'm making it relaxing there, we're going to get going a little bit more intently on the project, right? So by the end of this week, I want you to have done your payroll and your operating expenses. Okay. Next week we're going to do the sales forecast, probably get into the cash flow. And then after that, we should be kind of done, and that's what I want to get done. You know, what do we got? 13 weeks. We're in week 4, so yeah. So if we can get done about week 6, start of week 7, okay, then we're in pretty good shape. And then we'll start on project 2 a little bit. So, okay. And some of you may have already worked ahead and done pretty well on this. So we looked at payroll, right? Oops, let me get this turned on. Wait till this gets going. I had to look it up too. I couldn't remember how to spell his name. Not that that's an easy name to spell, but okay. So we looked at payroll year 1, and I said everybody should have somebody, even if it's just part-time. Hopefully y'all had some workers' compensation. I think I'm caught up. I think I gave everybody feedback on their starting point. I think I had one that came in a little bit late. I haven't looked at yet, but everybody else I've given feedback. So if I told you, okay, we should be good, right? Away we go. Again, that doesn't mean you can't go back and change it. If some things happen here a little bit later that make it necessary to change, that's fine. So payrolls 1 through 3, and they've kind of got a bad deal here, and I should change some things. But the only worry here, it's going to automatically do stuff for you here, okay, and so that's simple, except let's say that if you're a part-time employee and you've only got one, well, let's do it this way. Either your full-time or your part-time employees, that 10% shouldn't have been there. I don't know why they did that, but you'll notice here that all these 4 are basically increasing at the same rate as the full-time employee. Okay, and over here it's the 30%, which is full-time or the part-time. Say this is kind of shouldn't be there, but what I'm trying to tell you is if you make some changes here, even if you leave this part-time employee at 10% increase, these 4 should be changed to 10% as well. Okay. If you change it, if you don't want to give your employees that big of an increase, and you may not when you start looking at your cash flow or your income statement, 10% is pretty good bump. Okay, or the 20% for full time, and then 30% here. That's some pretty good bumps, right? Okay, so if you change that, keep these the same. If you're going to increase your full time, increase your part time the same, because that way the formula will be consistent, and then change this to match. So let's say you wanted to go 5%. I'll just do as an example. 5% here. And then just make sure you do 5% down here as well, right? Okay, if you change this to 10% then. Then do it down here as well. Just these top 4. Okay. You can, if you want to change, because these are orange colored or whatever, these are okay to change, but be consistent or I'll catch you here. Make sure that these increases match these top 4. Everybody got that? Okay. That's all you really have to worry about for page 2 or years 1 through or 2 through 3 for the payroll.
Then should we change the part-time to 20 to make it match?
If you want to, yeah, to make it match. Yeah, if you want to give a 20% increase, go ahead and make that change.
Or can we just leave it at the 10%?
If you leave it at 10%, you've only got part-time employees, then change the bottom for those 4 down here, Social Security, Medicare, to 10% in that. Okay.
Okay.
Yeah, I should really, and I say that every year, but I'm kind of wasn't expecting to be teaching this, but I need to change the formula. It would make more sense. There'd be an easier, a better way to do that. But that's kind of what it came with. Okay, we're going to get here to operating expenses then that I'll want due at the end of the year, or end of the week. Okay. This isn't that tough. You know, again, I don't need you to go and look everything up and be absolutely precise, but I need you to think about it. Okay, I want some common sense in here a little bit at least, so that you know, it looks reasonable, if that makes some sense. So these are the monthly expenses. Okay, separate these completely from those expenses that you put in the starting point that you might have for startup, pre-startup, like your pre-startup salaries and those types of things. Okay. The one where that gets to be a little bit confusing is maybe the insurance, and I'll talk about that when we get down to it. But you know, just think about it and be consistent. You might have had a big number for your startup advertising because you had a sign and you had this and that. But as you go along, you're going to have a website. You know, I don't know, maybe there's a commercial Facebook or something. You know, I don't know what's all available out there. I'm not that good technologically, and marketing's not my big thing either. But you're probably going to have a monthly budget, and it may be fairly consistent. You know, it may differ a little bit in real practice, but you're probably going to have kind of a monthly budget that you do. Small business, you know, maybe it's going to be $50 a month. It could be seasonal too. If you've got a seasonal business, you know, if you're doing a lawn mowing business or something, your advertising might be real heavy in, you know, March and April, maybe the first part of May as you're trying to build that business before you start lawn mowing, right? Or if it's snow removal business, your big advertising may be in, you know, October, November, December kind of thing. So, but if we're consistent, and I just want to show you, most people know this, but so I put $50 in there. I kind of had to hit enter or go down to another cell and then come back. You see that little square down the bottom? If I want to be consistent, I can get that cross over top of that, left click and hold, and I can drag that. Okay, and that'll put $50 a month down there. A lot of your rent's going to be that way. Okay, you got rent or lease of other business property. This is vehicles, machinery, and equipment. You know, my rent may be $500 a month, right? So click there, back, grab it, drag it, boom. You know, my rent's probably not going to change. You know, car and truck expense. Okay, so I might, you know, if I've got car and truck, I might have some fuel. You know, you could have this. This is a perfect one where, you know, a couple times a year you take it in for some preventative maintenance. You know, you change the oil on it, do a couple things like that, right? So you might have $100 a month, you know, but in month 5 and month 11, you're going to take it in and get some other maintenance, and so that could be $250 a month in those 2 months, right? So again, think it through. Common sense on a lot of these. Commissions and fees. Most of you probably won't have that, right? You don't have any salesmen working for you. Contract labor. Again, most of you will not have contract labor. There could be some exceptions. When we get to insurance, now that's one, you paid your insurance up front, right? Yeah, you did, right? And so you paid $1,200, okay, and it's going to amortize out at $100 a month. I'll show you that later at some point in time, okay? So you're not going to have a monthly expense now, especially not a monthly cash expense for your insurance, right? But when you get to month 12, oops, which line's that on? Right there. You get to month 12, you might have that have to pay that $1,200 again, right? Okay, so that's probably a more accurate way to put your insurance down, right?
That should match the first number from the startup, right?
Probably, yeah. I mean, if you want to calculate in a little bit of an increase, because you know things tend to go up a little bit, you could. That's fine, but it should be close. Yeah, the same's fine. Legal and professional services. There's another one that probably isn't going to be every month, right? Unless you maybe you got a payroll service, you might pay them $40 a month to process your payroll. That's fine. But some of us may not have any legal and payroll. You got a little small business and you're going to do your own bookkeeping, do your own taxes, those types of things. Fine, okay. Some of us, however, you know, we might have to pay our accountant in April. If you're like me, they're always deferring, or we're having to send in extensions, and so I pay my accountant in October after all the extensions are done and we finally get our taxes filed. Okay, so that could be more of a one-time type of a thing, right? Licenses, a lot of you won't have that. Same thing, that could be more of a one-time thing if you have to pay a fee. You could put in there, most of you, if you have LLCs, once a year, usually about March, April, you got to pay $20, I think it is, for a filing fee. You got to update your information right through the state. Office expense, you'll all have some office expense. Everybody's going to have office expense. You're going to buy some envelopes, you got to pay for some stamps, you got to, you know, pens and pencils, some notebooks, you know, some invoices, you know, computer paper, depending on your type of business, of course. But you're all going to have a little bit of office expense. Doesn't mean it has to be a lot, and it's probably going to be more of a consistent number that you'd put in there. Again, you can average it out over the year. I mean, you might go to Sam's Club, you know, 3 times or 4 times a year and spend $250, but if you want to, you can average that out and say that's $80 a month, right? And you go down there 4 times a year. But either way, you could put it in 4 times at $250 too, so that's fine. Rent or lease vehicles, machinery, and equipment. For most of you, that may not apply. Riley, that could be, you know, construction business. They're oftentimes out renting some stuff periodically. So, yeah, you know, that's just going to depend on the job. So that's going to be a little tough for you to, you know, kind of estimate. Repairs and maintenance. Same thing. Just about everybody's probably going to have a little repairs and maintenance. You know, even if you're leasing your location and whatnot, you know, usually you're responsible for a lot of the minor things, you know, and so you got to touch up the paint here and there. You got to do a little this, a little that. Cleaning, right, is part of the maintenance. You got to do a little bit of that. But again, depending on the business, it may not be that much. If you're heavy vehicle use or something, you know, or equipment use, then that might be a bigger number. Supplies. Everybody's going to have some supplies. Again, this can be a really small number for a lot of you, because it might literally be the toilet paper and hand towels that you have in the bathroom. Okay. Cleaning supplies, you're all going to have some cleaning supplies, probably some things like that. Rags, you know, if you got so it's probably not a big number, but it's probably a fairly consistent number. You know, $25 a month, $50 a month, could be 100, you know, depending on your type of business. In some businesses, it could be a big, okay. Travel, meals, and entertainment. Your vehicle expenses up here. So if you got a vehicle, that's up here in car and truck. So this kind of travel would be, the travel itself would be if you got to take an airplane, you got to do something like that. A lot of you probably won't have an expense here. Meals maybe, you know, if you're got that type of business where you're out entertaining some clients, you might have that a little bit. Utilities, and that kind of depends on your business. Some of you, you know, if you've got an office, you're going to have some utility expense. And if you don't have an office, you might not. You know, if you're just completely, but if you're working out of home, you know, you're crazy if you don't write off a little bit of the utility expense from your own house. Okay, because why not? You got to be careful about that. That's one of the biggest red flags for the IRS. Miscellaneous, just a catch-all. Okay, whatever else I haven't thought of, you know, if you're thinking of something, it can go down in miscellaneous. Okay, all the white squares or cells down here, they'll just fill in automatically. So you shouldn't have to worry about those at all. You see, I'm already building a line of credit. That's because I got these expenses, but we'll fix that later. Any questions about that? questions about the, operating expenses?
If we leave them blank, it's like the ones we don't need.
Yeah.
Car and truck, just leave them blank, or
Yeah.
have to put
Yep.
zero in?
Nope, just leave them blank then. Yep, you don't have to do anything with them if, that's a good question. If you don't have any car and truck expense, just leave it blank. You don't have to put zeros in.
I didn't know if that would mess with the formulas or,
No,
okay.
no, that's fine. So just leaving it blank is probably the best way to go. So, yep. Okay, questions about that? Okay, I'll quit, let you guys get to work and come around and see how everybody's doing, and away we'll go.